Hello, everybody. Welcome to the market briefing for the weekend for Sunday, June 5th. This is going to be a short one. I'm having one of the worst colds I think I've ever had. So I'm gonna make this really brief, do a really high level look, and so hopefully get something out of this. Anyway, we will look at the markets here. So first disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and are not to be considered advice to buy or sell any security, and all trading and investment decisions are your own and done at your own risk. All right, we got that out of the way. And I'll apologize if I sniffle a little bit through this. Okay. So coming up this week, Monday, no economic reports whatsoever. In fact, it's quite a light week until we get to Friday. Tuesday is consumer credit. This might be interesting. I think that the market is going to start paying more attention to consumer credit. Especially if there's more talk about recession and whatnot. Wednesday, we have the 10-year bond auction. That will probably be watched fairly closely. Thursday, we have unemployment claims, as we do every Thursday. And then on Friday, it's the big one. We have CPI, Consumer Price Index, also known as inflation. So obviously everybody's going to be watching that really closely, and if that number comes in hot, the market's going down. If that number comes in flat or down, or if the number comes in below expectations, we're probably going to rally. So it's a bit of a tough call. If everybody knows this is coming up on Friday, when do they start positioning for it? So something we want to pay attention to later in the week. Also coming next week, a week from Wednesday is FOMC. So that's obviously important, and people start positioning ahead of that. By the end of this week, certainly around the CPI report, people will be positioning for the FOMC meeting the following week, and also at the end of that week. So basically 2 weeks from today, or 2 weeks from last Friday, we will have quad witching, when all the options contracts and futures contracts expire, and so that's usually brings some volatility into the market. So for earnings, very light on earnings. I don't see really anything that's interesting until we get to Thursday before the open, and we have NEO, and then, and also fuel cell. That could be interesting as well. I didn't highlight that one. And then on after the close on Thursday, we have DocuSign. Okay, so why don't we start digging into the market a little bit? We'll look at, like I said, we're gonna kind of blast through this a bit. Look at the major indices and a couple of important sectors, and maybe a couple of individual stocks that we've been keeping an eye on. I need a chart, don't I? That's not SPY. So let's look at the S&P 500. You can see that last week I drew in some lines, or it's just last week. I thought that we rally, we're going to come up to this resistance level, go sideways for a bit, and then pull back. Well, we went a little bit through the resistance level, up to a slightly higher resistance level, and we have yet to pull back. I'm kind of hoping now that we don't actually pull back. I'm hoping we've got this sideways action. In fact, I'm going to get rid of this because it's time to clean this up a little bit here, because I want to draw in the base on base. I want to draw your attention to that. Okay, so because you know how much I like a base on base, and I like it because the market likes it. Traders like this pattern, right? So, you know, we've got a base here, and we have another base here that we're building, currently building. This is great. You know, this suggests we break out to the upside, although it's, you know, it's a coin flip here. You know, we're right in the middle of this range. Actually, why did I make that so big? That's better. You know, I mean, we had that big green day, and then we gapped down on Friday and kind of had the inside day here. So that's not the most bullish thing in the world, but I mean, we didn't like come crashing down either. We've been supporting by this 21-day moving average. So I am leaning slightly bullish on this, but there's, you know, there's a lot going on, and sentiment is terrible right now. So you know, it is such a tough call. So how do you play this? Well, you know, if you're conservative, you wait for this to break out. If you're aggressive, and if you're bullish and aggressive, you know, we get a little pullback on Monday morning down to this 21-day moving average and start bouncing from there. Well, you could buy down here with a stop just below, right? If you're aggressively short, you know, if we get another pop up into here, maybe you sell that pop up into this area. You know, or if you're more conservative short, you know, I mean, if we start breaking down into here, I mean, we're definitely coming down and testing these lows again. So that's when you want to start looking at your shorts. So yeah, a little indecisive, but I am leaning towards continuation of the rally. With the caveat, you know, we got a lot going on in the end of the week. So, you know, I mean, it could be we move up for a couple of 3 days. And then start getting nervous about that CPI coming on Friday, and you know, Thursday maybe have a pullback. The Qs looks, you know, kind of similar, you know, holding up on top of the 21-day moving average, but below a resistance level. The IWM, the same sort of deal, right? A little base on base here, and building another base right below resistance. You know, this is even nicer to me when you build when you build a base right below an important resistance like that. When you do break, if you do break out of it to the upside, it just makes it that much more powerful. So, you know, you should be watching IWM really. I think IWM is going to lead. IWM has kind of been leading the markets a little bit lately. And I think that if this breaks out, it's going to be leading the markets, and the other indices will follow it. And I think that would be a powerful move on the IWM. The microcaps, IWC, same sort of deal. You know, trying to break out of this base on base. VIX is interesting. It broke down below. Remember, I highlighted this box up in here. And we're just now breaking out the low side of that. So does this move down here continue? It was interesting on Thursday, I think it was, Disguise This Guy pointed out some divergences going on intraday, mostly on like a 5-minute chart. With the VIX and the indices. If I remember correctly, the indices, the SPY especially, was coming down, and the VIX was coming down, and that's not usually the way it works. Usually they're inversely correlated, and when you see that happens, it's definitely a signal to pay attention that something's going on. So that could be a bit of a bullish sign. And like I said, you know, we've broken out below this. Do we come down now and test the bottom of this range? I suspect we do, right? I mean, as if I'm going to have a bullish thesis on the indices, then I have to have a bearish thesis on VIX, right? TNX is the 10-year yield, and we were looking at this head and shoulders, you know, potential head and shoulders top. It did break down below the neckline a little bit, and it was caught by the 50-day moving average, and now that's starting to move up again. So that's not ideal for being bullish on the market, because if yields are rising, then equities are probably falling a little bit. The dollar index, we got to go over to trading view for that. Let's actually go Whoops. Okay. Oh, that'll work. What the hell? Okay. So this is the U.S. dollar index. That rolled over nicely, and that's one of the reasons that we've had nice rally in equities, a decent rally in emerging markets, and commodities. Good to see that roll over. Now it's been caught by the 50-day moving average. It's getting kind of squeezed right now, actually, between the 50 and the 21. So where does this go from here? If we want to be bullish on equities, we want to see this continue to roll over. Another thing we'll watch for clues to what might be coming. We'll go back over to e-signal. EFA, the developed economies in Europe, the Far East, and Australia. Still kind of hanging in there. Had a nice rally, taking a bit of a break, and that's fine. Taking a bit of a break near kind of resistance. I should probably get that in there. Sort of in this area. So yeah, we want to see that break out of there, right? If the rest of the world is doing well, then this is a good thing, obviously. Emerging markets, not as thrilled about this one, but still, it's rallied a bit. It's come off the lows. It seems to be, taking a little bit of a break, go sideways. We'd like to see this break out the top side of that. All right, let's go back to here. And what do I want to look at? Okay, so this is our dollar cost average timing tool, weekly chart, the S&P 500, and we can see that we are still in the red zone for our dollar cost averaging. We still got a lot of work to do before we're going to be turning green in here again and switching on our dollar cost averaging buys. Okay, let's go over to some of the, what do I want to look at in commodities? Did uranium do anything this week? This is Cameco. So yeah, we were watching this wedge. It's just gotten messy. It's almost like a broadening over the last week, right? Given the strength of the markets, actually the markets weren't that strong. The markets were messy too this week, weren't they? So I don't know. I'm meh. But it still is an upward channel. Our overall sort of copper had a nice move. Broke out the upside of that wedge that we've been watching. Really strong move on Thursday. Pulled back a fair bit on Friday, but this was such a strong move, right? We don't see moves that big in copper very often. So this needs to, recover from this big move down on that it had on Friday, and turn itself back up again. All right. So general commodity index is broken out to the upside. We were kind of watching this going sideways here for a while, right? Well, it is now definitively broken out to the upside, so that's good to see. A lot of this will be oil and energy, of course, right? The agricultural commodities, these are continuing to weaken and sitting right on support now. So, we still have this big uptrend line that's been, intact for a really long time, and that 100-day moving average just below here. But yeah, if you're in any agricultural commodities or agricultural companies, you might want to be careful. If this starts breaking down, if this loses this support area right in here, this could move quite quickly to the downside, maybe even down to the 200-day moving average on that. And I think a big part of that was wheat. I think wheat was down a lot this week. Yeah, wheat had a breakdown. All right. Let's. Nope, that's not what the one I want. Oh, I forgot to bring. Sorry, bear with me one sec here. All right. Let's take a look at FinViz and look at these sectors and look at our sector performance. Okay, so how do we do on the week? On the week, consumer cyclicals, that's your consumer discretionary, did really well. Communication services did really well. Technology, industrials, energy. This is good. This is pretty bullish, right? These sectors that did well this week. And then if we look down the bottom of our list, I don't want to see financials this far down the list, but with everything, we'll take it, I guess. If we're getting consumer cyclicals, communications, technology all up at the top of the list, I guess we'll allow financials to be this low. But take a look at the very bottom of the list. Utilities, consumer defensive, and healthcare. These are all very defensive sectors, and so it's nice to see them at the bottom of the list. On a 1 month basis, energy is still strongly outperforming. Interesting to see utilities in the number 2 spot there. And of course, consumer cyclicals are way down at the bottom along with, technology. So that's sort of our sector performance for the week. Let's go back to our charts and look at energy. Energy continues to go, right? Just, rock solid uptrend here. You could even argue that the trend is accelerating a little bit. Let's draw that in. Okay, yeah. But no reason to think this won't continue, especially if that US dollar, continues to fall. Crude oil. Crude oil's not making new highs yet. But it did break out above this resistance. A little messy though. Profit taking. I mean, oil's getting expensive. We did have OPEC this week, so it shouldn't be surprising that crude was volatile this week, and they did raise production. I think the market wanted to see them raise production more. That was on Thursday, and you can see kind of this hammer candle here that it drew on Thursday after they raised production. So obviously the market was wanting to see more. And of course, some of the oil stocks are doing well. ExxonMobil still solidly in an uptrend. DMLP is one that we're watching. This had a fair bit of pullback on Friday, which was kind of odd. I didn't see any news on it, but it's had a really good run here. So, I mean, a red day shouldn't be terribly surprising. It's just odd that it happened on a day that oil and the other oil companies were green. I noticed we were talking about Northrop Grumman. This bull flag we talked about last week. Well, it finally broke out of there. Finally broke out of the flag. I mean, this flag went on for a while, right? And it even got messy with a bunch of these buying tails. Sorry, these kind of hammer candles. Every time it poked out below the flag, and obviously on Friday it broke out of the flag. Now it's come right into resistance here. So this could be an interesting watch for Monday. Does it continue higher? And if it does continue higher, does that take it to new all-time highs? Would that be all-time highs? Yeah, I think that would be. So yeah, this could be an interesting watch. This could be a big breakout for this. I mean, look at this here. We were looking at the flag last week, but the flag is just part of this bigger flag or this ascending triangle, right? So a breakout to the upside of this. This could be a big move. You would measure that. From about here to here, and then just copy that up here. So this could go to 625. That would be a nice move. So yeah, it might be worth watching. Not investment advice. What else? Financials. Yeah, I'd like to see financials a little stronger. Some of the companies are good, and some not. But we did kind of turn up. We've pulled back. You could definitely call this a bull flag here. it would be nice to see this break out to the upside of this soon, because this market's going to have a hard time going higher if financials are falling. What else should we look at? Technology. So yeah, technology, it looks much like the indices, of course. Semiconductors, looking like maybe they want to get going. Left sort of a gap, although that gap is almost filled, but yeah, it'd be nice to see those get going. I won't look at all the fangs. Tesla, I closed out on Friday at the open, or very shortly after the open. Once it started pulling back after it tried to move up, I closed out my investment position in Tesla and also a swing trade that I had on. And maybe this is something we could go into in more detail on Thursday in the Ticker Talk. If anybody's interested, they can feel free to ask me. But I'm kind of done with Tesla. I don't think good things are going to happen here. So, if I miss out on it, no, well, whatever. But I think this continues to the downside. And that's a little scary for the indices too, because it is a big chunk of the indices, and it is a big chunk of people's sentiment about the market. Anything else to look at? Oh, Tam, we were looking at solars. It continues to move up. Had a nice consolidation, and then this, moved up out of there. Continues to go, and it's a couple of the individual companies look good in there. GOGO we were looking at last week. I got shaken out of this week. Didn't run as far as I thought. Started pulling back. I didn't like how much it had pulled back. I got shaken out with a little bit of profit. Not as much profit as I would have liked, but still, in this market, anytime you can take profit on something, that's a good thing. PLTR is still kind of hanging in, building this bottom, right? A little base on base action here. It needs to get moving higher, though. What else? Oh, DraftKings we were looking at last week. We looked at this bull flag. But it seems to have firmly broken out to the downside on Friday. So much less bullish on DraftKings today than I would have been last week. And an interesting one, which I don't really understand, but because I'm kind of bearish on housing generally, the U.S. housing market. It seems to be very toppy right now, but we've got this nice bull flag in XHB, the home builders ETF. And if you look at a lot of the individual home builders, you see nice nice bull flags. So I'm not sure what's up there. I don't trust it enough to play it, again, because I'm kind of bearish on housing in general for a bit. So I'm not sure why that is starting to look bullish. And one of the companies in that space, Toll Brothers. I mean, look at this, is really nice and tight. This is a great opportunity. This is a low risk opportunity to play this. If you're bullish on housing, you should be getting in this bull flag. Sorry. Because it's very, very risk defined. It's nice and tight, very playable right there. But you gotta like that housing space. So that's it. That's all I've got for you. Hopefully that was helpful. And I will see you guys on Thursday. I'm sure by then I will be feeling much better than I am today. Hopefully back to 100%. We'll see. So enjoy the rest of your weekend, and I'll see you in the Discord.